We had a big breakout today on the S&P 500. I'm going to talk about what that means. Should we expect now to get some good bullish moves going forward? Will this unleash the hound, so to speak? Or are we going to be back to our summer doldrums? I'm going to break all that down in tonight's video. I'm going to break down one key driver that could give us a good run in stocks heading into the end of the year. And also, today's trade idea looks at an industry that really benefited, sector that really benefited from today's news. Let's go ahead and get started. Today is Monday, August the 27th, 2018. This is the Market Outlook from MarketScholars.com. My name is David Settle. Thank you very much for tuning in tonight. Welcome to those of you who just found us, who are watching us for the first time. Keep coming back for more. Subscribe to our YouTube channel. Mouse over the logo in the bottom right corner of the screen there. Click the red subscribe button that pops out. Also, click the thumbs up icon that's down below the video. That lets us know two things. You like the video tonight, you want us to keep doing it tomorrow. Really easy way to give us feedback. You can do that right now while you're watching. Comment on anything that stands out to you. We'd love to hear what you have to say about tonight's Market Outlook video. Join our daily Market Outlook email list. There's a link popping out in the top right corner of your screen. Click that link to subscribe. Follow me on Twitter for more content like this throughout the day and throughout the week. And remember, join our Market Outlook community on Facebook. All right, well, let's take a look at the S&P 500 first off with the market forecast indicator. You see breakout move today, and it was bigger than what we've seen, not just because of the news of the day, right, the trade deal with Mexico, but also because we finally broke out above those January 26th highs. You can see Friday we closed pretty much right at it, and today, you know, to get through old highs, you do need, you know, a relatively larger range, and today's range was above average. Now that we're through it, look for a smaller range to come back, just like we had prior to getting above those highs. So when you get above a significant level, significant in this case because everybody sees it, right? Everybody saw it back in January. We all know about it. We were running right up to it. The other indexes are already closed above there, are getting to a new all-time highs themselves. And this was the case for the S&P. So we got a good range today. Of course, you have to include the gap in that range. But now look for that range to start to peter out again and come back to much lower levels. The posture is strongly bullish. The near-term line got back up into the upper reversal zone, shows a good bullish bounce too. It's our second day up above 50. So there's our bullish, our last near-term low point right there, corresponding to that low point. So it's day number 2. We're already up to higher near-term highs. The near-term line itself is above its previous peak, so no threat of a divergence showing up and a bearish divergence anytime soon. The momentum line fell down mainly because of the gap, so we just narrowly avoided really a cluster with all 4 lines, including the market sentiment line. We ended up not getting that simply because of the small range today that does not include the gap, which brought the momentum line down a smidge. You see market sentiment's rising. It's almost back above 80. So again, the trend remains strongly bullish. Long-term, intermediate, now even short-term trends, all really strongly bullish according to the market forecast chart. You see the Dow Jones also came really close to an overbought cluster, which it hasn't had for a long time since that run up ahead back here. Now you think, well, you know, we got those overbought clusters and that foretold the end, right? Well, we also got one earlier on, and there was some little bit of weakness after that, but then we continue to rally. So remember, overbought clusters, when you're relatively early in a new intermediate run, does not necessarily mean, in fact, it's actually a good sign. It kind of solidifies the intermediate run. Now this intermediate run, like for the Dow, started in early July. So this one, the intermediate run's been going on for, you know, over a month, about a month and a half. Remember, the S&P started a little bit earlier than that. But still right around the same time frame. So we're going on a couple of months here of having this current intermediate run. Run number 2, because there's the first one, on the market sentiment rally that typically should last 6 to 9 months and get us up to new highs. So you see for the S&P we are to new long-term highs. Same thing with the Russell and the Nasdaq, you'll see in a minute, but not the Dow yet. So again, still some room to run for stocks to get to new all-time highs across the board. You can see the intermediate posture is strongly bullish for the NASDAQ. New all-time highs again, well up above its January 26 highs for the NASDAQ there. You can see short-term sentiment's also strong, is up to a new near-term high from the last one. And then finally the Russell 2000 showing a similar posture, strong bullish posture. Its near-term lines pulling back a little bit of a long upper shadow. But remember, it broke out a few days ago. It broke out of this sideways action that we expected to break out to the upside. It broke out a few days earlier than the S&P, and so it's a little bit further along in the near-term run than these large cap indexes are. Okay, before we look at other technical charts, a reminder you can watch our Market Outlook video on MarketScholars.com. Go to the blog at the top of the page, and you'll see the most current Market Outlook usually towards the top. Remember, we also have Market Outlook forums that you don't need to pay to participate in. You can do that for free. To do that, click on the subscribe icon over here on the right, and that will take you to the page where you can subscribe and participate. Any questions or comments you have for me, or for anybody else in our Market Scholars community, make sure that you post it there. Remember, we ask if you want us to do this video tomorrow, let us know. And the easy way to let us know right now while you're watching is click on this heart and like tonight's Market Outlook tweet, number one. Number two, click on this icon. It takes you to your Facebook page where you can like today's Facebook Market Outlook Facebook post. Posted on my Facebook page coming up here in just a second. And then the third click would be to like right there. Remember also, if you feel like other people should check this out, you can share it really easily down here at the bottom. Just click on either of these buttons, and let's see if we can get that number up to 100. There's the like button on your on the Facebook page. That will, again, those three clicks tell us, when we see them, tell us, we liked it, David. We want you to do it again tomorrow. Now let's take a look at the long-term chart for the S&P 500. You can see just how bullish it is. Above a rising 50-day moving average, which is also above a rising 200-day moving average, so very, very good. Good marks there. If you take a look at the Heikin-Ashi candles, you can see this week's candle looks very bullish. Remember, that closing price for the candle is an average of 4 values. This week's open, high, low, and close for the S&P. So that doesn't change. You know, 2 of those values might not change by the end of the week, the open and the low. The open won't change. The low might not change by the end of the week. The high and the close obviously can. So the average can move, but it doesn't move as fast. So keep an eye. That's a good bullish candle, especially getting if the average price is above last week's high point. Great bullish candle for the S&P 500. When you look at the 3 green arrow chart, still 3 green arrows. The moving average has been green for a long time. We're shaded green again. The MACD is green, the stochastics is green. You look at the 2-line versions, you see that they're both above their moving averages. Moving averages for both are rising. They're relatively high. They're not extremely high, but they're relatively high, so we'll keep our eyes on that. We are way away from the 8-day moving average with today's breakout move, so expect us to slow down now. We might not come down, but expect us at the very least to slow down considerably and let the 8-day moving average kind of catch up to where the price is. You can see the breakout on the intraday chart, big open, second consecutive opening gap, and then of course getting up to a new 4-week high point. The 4-week low point won't change until the end of the week, and it will move up a little bit. It will move up to that low, so which will bring up the 4-week midpoint probably into this area, this 285.75 area. So we'll keep our eyes on that. That will be our, as long as we're in the upper half of the chart, that's a bullish sign. Of course, it can also move up too if we keep pushing the 4-week high point up. You can see a higher high and higher low today compared to Friday's, which is in green, and of course easily above last week's high point. And the purple line here is the opening value for the Heikin-Ashi this week. So for us to get a lower shadow on that chart, which would be a sign of bearishness, we'd have to get below that line. Usually we don't get that until the line kind of creeps up closer to where we're trading at the beginning of a week. So we don't have to make as big of a move to the downside to get there. So bullish patterns all around the board. You see, if you take a look at the volume today. So we saw the trading range was trading range was just over a point, but you have to add on about a point, a little bit more than a point between the close yesterday at 287.51 and the low today at 288.68. So a little bit more than a point. That gives us a above average ATR when you add on that point there, and you can see the volume too was right about on average, about 57 million. So when you look at those numbers in context, 57 million is right about an average, but that average is very low, and 2 points is a pretty decent move. Again, you needed it to get through a significant high point. Expect now the trading ranges to get down to like a point or more, and especially as we slow down, like I said, and let the 8-day moving average catch up. The relative ATR is easily within below the 1% level. You know, we'd have to get up to almost 3 points now in the ATR just to get to a 1%. So we'd have to start consistently getting 3+ point daily ranges for us to really get bearish. We're not there, right? We're definitely not there. Now we take a look at the volatility index, and you can see volatility started the day higher at 1248, finished the day at 1209. So I wouldn't put a lot of stock into the higher volatility today simply because it gapped higher. It was down throughout the day and finished at the lows of the day. So keep that in mind. You also see on a relative basis, when you look at volatility on a relative basis here, it jumped up too into the closer to the sweet spot and you know, pulled back down to the lows of the day, but still stayed in that nice bullish territory. That's bullish for volatility, you know, when it's relatively low, but not extremely low when you start to worry about a jump to come out of somewhere. So, you know, we're not there yet, and we're in a nice, steady, slow and steady bullish grinding pattern right now. You know, that, you know, today wasn't so grinding because of this news and because of a significant technical breakout, but that doesn't mean that every day is going to be like today. In fact, I would highly doubt we'll get another day like today the rest of the week. It'll probably be really quiet and really slow as we head into the holiday weekend. Not that we'll pull back, and I don't expect this necessarily to pull back, but I do expect the 8-day moving average to start to catch up as we really start to grind and slow down. All right, so to summarize, the posture is strongly bullish across the board. We're on a nice, good bullish trend. But as I mentioned, expect the bullishness to start to wane as we head into the end of the week. Not that we'll drop, but at best we'll probably start to just grind slowly higher. And like I said, allow that 8-day, as far away as we are above the 8-day moving average, allow it to start to catch up. You know, again, Labor Day weekend's coming up, and it's that time of year right now. You know, again, you get another trade victory, say with Canada coming on board, and that might provide a pop. But again, from a technical perspective, the bias is still easily to the upside. And every time I hear or see articles or hear on TV about, you know, how we shouldn't, you know, how we're going to start dropping and we're too overbought and you know, the valuations are too high and we're going to start pulling back, and for whatever the things are. Remember, the market's pain, the pain trade, the market's moving in the direction of the pain trade. So the pain trade still, apparently, for a lot of people, is still to the upside because they're still not convinced, despite the fact that we're getting all-time highs across the board and across different indexes, are still not convinced. And until the pain trade is to the downside, we'll continue to grind our way higher. So what do you think? Do you agree with that, or do you disagree with that? Click that link popping out in the top right corner of the screen there, and then click on agree or disagree. Let me know what you think about the market posture tonight. And then if you do disagree, if you click on disagree, which is perfectly fine, scroll down to the bottom of the page and let me know what you're seeing that maybe suggests that these that we should be more bearish than we are right now. And share with us, with the Market Scholars community there and other Market Outlook viewers what it is that you're seeing. All right, now let's talk about what's driving the price action today. The biggest mover, or one of the biggest movers on the day, of course, is the trade deal, the trade announcement, an agreement put in place between the U.S. and Mexico. So not a NAFTA deal yet. The expectations are, though, by the end of the week that Canada may be involved in this deal. I think that's what everybody is hoping for. I think the market's kind of expecting that too, with how strong today's rally was. The dollar coming down. The dollar's been really dropping and is now kind of changing its direction. When the dollar was bullish, you had MLPs and real estate stocks and these kind of different types of stocks, preferred stocks. There we go, it's preferred. They all did really, really well. But now kind of lagging behind, especially behind international stocks, which were your two biggest winners today. EEM and EFA really rallying. Of course, growth stocks continue to outpace value lagging the S&P 500 as we're bullish. The agricultural commodities benefiting from weakness in the dollar, finally coming up off of 3-month lows. And of course, gold and crude oil and commodities as a whole continuing to move higher too. There's your mid-cap stocks outpacing and small-cap stocks lagging. So a little bit of a risk-off relationship there with the underperformance of small caps relative to large caps. But one day doesn't make a trend. We'll see if that persists. On the other end of the spectrum, look at bonds all across the board. Long-term bonds down, intermediate-term bonds down, and other investment-grade bonds down, mortgage-backed securities, municipal bonds, foreign bonds, all showing small losses. So yields are up today. If you take a look at the 10-year note here, we'll take a look at a long-term chart of the 10-year note. Bouncing back up after a little bit of a breakdown last week. So we'll see, if that continues to be the case. We'll see if we start to slow down this descent that we've had in yields over the last few weeks that has pushed us through that neckline support level of this head and shoulders pattern and this falling or slowing, of long-term momentum that we're seeing on this MACD chart. If you take a look at the dollar index, you can see it's also turning around. That's one of the more significant after reaching the 50% Fibonacci retracement of this bearish move the dollar had since the beginning of 2016, the beginning of 2017 to the beginning of 2018. The dollar really underperformed. It bounced back up this year up to 50% Fibonacci retracement, and where there's some significant trading in this area. And as of right now, rolling over a little bit. So, that's having its effect on other asset classes. I mentioned EEM and EFA starting to take off. But you look at like gold, you can see gold starting to turn up a little bit. A little bit of an upper shadow there on that candle last week. But now a bullish candle here this week from very oversold levels for gold. And you can see crude oil, which has been trending higher, bouncing back up after some weakness, some relative weakness in candles here over the last 6 weeks or so, bouncing up off of what would be a higher low point on the Heikin-Ashi candles. And the regular candles, you can see the bullish move we had last week, coming up off of relatively equal lows at 64.5, 64.79, and then continuing higher so far this week. So we would expect that to continue to be the case with weakness in the dollar. We'll expect that bullishness, the intermediate line crossing above 50 here, for that to continue to be the case going forward. That's on crude oil, and you can see here gold bouncing up, breaking up. A good bullish close here a couple of days ago on Thursday, and then holding. So far, holding that good breakout with the intermediate line crossing above 50 for the first time in a while. Speaking of the international markets, you can see that today Brazil had a good day today. Mexico also obviously had a good day today. And look at the U.S. markets. As good as we were, as breakout of a move as it was, outside of Russia, it was the worst performer on the day. India has also been rising. It's also hitting a new 3-month high like the S&P, but not as bullish as some of these others that have been lagging, coming off of 3-month lows. Brazil coming off its 3-month lows. Look at Canada breaking out, close to getting the new 3-month highs. Look at what a difference this makes. In fact, I tweeted out that that I've been saying in these classes in my portfolio management classes that once these really oversold international stocks up to balance, that's going to push U.S. stocks up even higher than they are. They're going to, because they've been down for so long, the international stocks, and you can see just what a difference it makes from August the 15th when they all hit their lows and there's multiple oversold clusters, in Italy and UK, and you can see across the board how oversold we were on August the 15th. The S&P was the only one in green. Even India had pulled back pretty sharply. Now this is what it looks like now, right? And everything looks, so bullish here. The colors have all changed. We're above moving averages France is above its moving average. Germany is above its moving average. Remember how far below we were. Japan above its moving average. UK close to being above its moving average. India hitting all-time highs. Italy is still lagging. That's not one we want to touch. Canada is above its moving average and close to 3-month highs, albeit in a tight range. Russia is probably not one that we want to touch either. South Korea up above its moving average. And you can see Brazil still got some room to run. So, things are improving. China above its moving average. Things are starting to improve across the board. And they're still, if you look at the 3-month returns, the S&P is still the biggest winner over the last 3 months with a 7% return. Look at all the catch-up. China and Brazil and South Korea. There's Russia, even UK, Germany, Japan, all still negative for the 3 months. France has barely turned positive for the 3 months. And you can see India as strong as it's been. So, this is what's going to fuel the market rising higher, and it's going to come with this kind of downturn that we're getting right now in the dollar index. And you can see it, like I said before, the bearish candle that we started to get last week, but then this week kind of showing that first bigger down, bearish body on the dollar that we haven't seen since the end of 2017 into the beginning of this year. The sector story kind of shows a similar story. This weak dollar, this bearish dollar move really pushed materials up higher. Energy, not quite as much. It's still out, kind of matched the market there. But materials and financials, which have been your biggest laggards, took off. Now financials, as laggard as it's been, now these sectors are sorted according to the sector selector that Brandon posted over the weekend. So make sure you check out our blog for that, for all the details inside the numbers inside these rankings. But you can see financials, all-time high or 3-month highs for financials. Energy and material still kind of struggling. Those are the two areas that have been beaten up the most by the strong dollar. But 3-month highs on discretionary, 3-month highs on industrials, which again shows how the positiveness of this trade wars. 3-month highs on technology. You can see real estate and utilities and staples kind of all pulling back. They've been the biggest winners over the last little bit. There's healthcare, staples, real estate outpacing the market now. You have utilities kind of starting to lag the market a little bit. Healthcare still holding up really strong. This technology and discretionary, those have been the three kind of biggest leaders in the markets. They continue to hold up really well versus the market. And of course industrial starting to look much better too, with weakness in these safe haven areas. Relative weakness. They've got bearish postures as their intermediate lines are falling towards 50. Everything else, look, you have a healthcare at 97. You have technology at 86. You have discretionary at 92. Even industrials at 88. Strong bullish postures. You have telecom up there. You have financials at 85. And then you have materials and energy, which are not quite as high, but making their way, right? Making their way. So they've been the laggard in sectors with that strong dollar, making their way higher to catch up to these other really overbought and strong bullish sectors that we've seen in the past. All right, one stock that's showing some bullishness today and a little bit of a breakout above some recent highs is Caterpillar in that industrial area. Strong bullish posture again with the intermediate line crossing above 50, so good sign. Coming up off of a divergent low, slightly lower low, well, obviously a higher low on the intermediate line. So Caterpillar trying to figure out and trying to take off and see what's going on here. And you can see it's got 3 green arrows on the 3 green arrow chart. Again, closing above its moving average. And if you take a look at the MACD and stochastic lines for Caterpillar, you can see they're rising above their respective midpoints, both above their moving averages. You can see the 8-day and the 17-day are close to crossing back up above the 30, which would be a positive development. If you take a look at some of these other charts, if you look at the intraday trading for Caterpillar, here we go, Caterpillar, you can see we have been kind of meandering around the chart's midpoint, but you see how bullish this was to get above last week's high point after trading down towards the lower end of last week's range. Good breakout move, getting above there and holding as of right now. And then you look at the long-term view here, which has been pretty negative. This industrial stocks, you got that long lower shadow, that hammer pattern a couple weeks ago, and now we're closing up above that body as of right now, right? There's only one day this week, but a good bullish pattern in that perspective. If you take a look at the Bollinger Bands for Caterpillar, you can see strong support down below here from a lot of volume over the past 52 weeks at that price. Not as strong in this price. So these areas that there's some old highs and lows, there isn't a lot of volume that's traded there. So there's opportunity for this to take off and get back up to the next area of resistance, which according to the volumes can be right around 155.5. So a good sign from the Bollinger Band perspective. You can see the DMI crossing above, the positive DMI crossing above 25, the highest positive level it's had in a while, higher than what it had over here. So a good sign from that perspective, from a positive development for Caterpillar as well. And of course, when you're not as bullish quite yet, because it's not really like high volume breakout, but it's still pointed to the upside, then of course we can take a look at selling as puts. In this case it's still only 25 days out, but you get some decent credit. You still get a 30% return of risk at that 138, 136 level. If you sell the 138 and buy the 136, you can see on the risk profile chart, you get decent odds, and that break even you'll notice is below that low point. So as long we had this low point on Thursday, we got the Harami Friday, and then the breakout move. So if we can hold up above that level, then we can keep keep this thing going. If it gets below that level, that's when we're going to probably, that's when you'll end up with a loss around 50 bucks that we'll take at that point and move on. Now you can see if it can get up quickly to a 50% gain, you can see it's not as big of a move to get to that gain as it is to get the other 25 bucks. So if we can get there quickly with a decent move to the upside, on this little bit of a breakout, then we'll take that quick 50% gain and move on to another trade, and then of course cap our losses at around 50 bucks if it were to kind of nullify this breakout and then get back below last Thursday's low point. Alright, I told you what I think, and now I want to hear what you have to say. Click the link popping out in the top right corner of your screen there. That will take you to our Market Outlook forums. What do you think about tonight's posture? What do you think about tonight's trade idea? Post your comments, any questions you have for me, any questions about something I didn't talk about, you can post there on MarketScholars.com. Thanks as always for watching tonight. I appreciate your time night in and night out watching these. Remember to subscribe to our YouTube channel. Click the thumbs up icon down below to like the video. Comment on anything that stands out to you. Follow me on Twitter for more content like this throughout the day. And join our Market Outlook community on Facebook as well as on MarketScholars.com. Thanks again. Have a great evening, everybody, and we'll see you all tomorrow.